Larry Gaines, PowerCycleTrading.com. In this video, I want to show you the importance of using trading indicators in your trading. So this is just an example on Tesla. So everybody, if you've been following the markets, obviously you follow Tesla and see some of the huge moves. Now, today Tesla had another gigantic move. It was up $142 or 9.47%. So if you're focused in on it and you want to trade it, the way you can trade it is what we call volatility squeeze breakouts. So this is my new indicator. It shows you everything that's in a squeeze, a volatility squeeze, from a 2-minute all the way up to a weekly time frame. And then the column or row above shows you the momentum. Is the momentum up or down? So if it's green, it's up. If it's red, it's down. So here you can see earlier today, this magenta color means that a squeeze trigger has fired. So we got a 60-minute trigger squeeze triggered in a 2-hour. Now, if you look at the charts here, I'm going to show you next. So I can look at this chart. On one chart, I can see everything in a squeeze. And then what I can do is, if I want to focus in on catching that trade, I break it down and I go down to that 60-minute time frame that was in a squeeze. So you can see here the 60-minute chart was in a squeeze here today. So you can see it started the squeeze back here in Thursday, Friday, and then today, when it broke this prior high right here, this is Friday's high. That's Friday's high right there. That exploded, and that squeeze just exploded to the upside. And then what you want to do is just track it using the moving averages and stay with the trend as long as it stays. So we can do that. Usually what I like to use is a 5-minute time frame. So let's take a look. So once this triggered out and exploded higher right here after breaking those prior highs, then what you need to do is you can use the 5-minute time frame, and just as long as it tracks and stays above this 8 exponential moving average, you stay with the trade. So right here, you would have probably gotten out right here. You can see it's starting to go negative. So you could have gotten out there at 1576. So you would have been in here on that break of that prior high at 1535 and ridden it all the way up, and probably you could have closed it out here at that 1572, or possibly held a little bit longer as it still held that 8 EMA on the 5-minute and continued higher, and then broke below and closed below it right here at 1592. So these are the kind of tools that you need for any of your trading, if it's intraday or swing trading or whatever. So what we like to do at Power Cycle Trading is use directional trading tools for these types of patterns, and then momentum right here, cycle 1, 2, is tell us the direction of that potential break, and then like to use options for the trades. So if you'd like to learn more about these patterns, momentum, and the option strategies used, make sure to sign up and join me this coming Saturday for my Encore live kind of option workshop, free workshop on trading breakouts and reversals using options. Good luck trading.